Hey guys, welcome to another weekly update. I'll be running through this week's financial news, evaluating which banks have changed their rates in response to the OCR update last week, and how the New Zealand, Australian and American stock markets have performed. If you haven't already, please make sure to subscribe to my channel down below to keep up to date with future updates. The past week has been pretty light with financial news. On the crypto side of things, the collapse of FTX is well behind us, with Bitcoin reaching the $30,000 mark, a price not seen since May last year. Alongside Bitcoin, we've also seen Ethereum pass 1900, a price also not last seen since May last year. On Wednesday, we had the latest release of the electronic card transactions for March. This is a monthly report outlining the volume and places where Kiwis are spending their money. If we compare March to February on a seasonally adjusted basis, Kiwis are spending more on cars and non-retail areas, such as healthcare, travel and couriers. As a headline number, it was also reported that hospitality spending has increased over 50% versus March 2022. Thank God the borders were opened. Versus the December quarter, once seasonally adjusted, spending was up between 1.2 and 1.6% for the retail industries. The markets have also settled after the shock OCR update last week. Many banks, including ASB, expect to see another 25 basis points increase in May, and the swap rate market seems to trust this view as well. However, as we saw last week, they can get it wrong. Later in this update, I'll be sharing which banks have passed this on to consumers. While New Zealand continues to see hikes, Australia and Canada have kept their cash rates down at 3.6 and 4.5% respectively. The Reserve Bank of Australia have said that they're taking a rest to further assess the inflation situation. Australia has also seen milder wage growth than here in New Zealand, and as a result their inflation is expected to be less sticky than New Zealand's. This is called a wage price spiral, where a tight labour market allows employees to negotiate higher salaries and in doing so spend more, aggravating the inflationary pressure. This is why New Zealand's Reserve Bank is hell-bent on increasing rates. As I've shared, card spending is still holding up strong. People are still out buying large household items such as cars, and without making these big moves, we can only expect inflation to continue at the pace that we currently have seen. Short-term pain for long-term gain is the way that it will be going. The US CPI data has also been released. For the 9th straight month in a row, their inflation numbers have slowed, increasing just 0.1% in March. Their headline annual rate now sits at near a 2-year low of 5%. And on an annual basis, food costs are up while energy prices, or fuel, are down. At the time of filming, on Thursday, the net migration numbers haven't yet been released. Most commentators expect these numbers to be up, and other recent data releases suggest by some margin. When our borders opened in 2022, there were a lot of articles written about Kiwis leaving for greener pastures over in Aussie. However, in 2022, we more than displaced those that left, as we saw a net migration gain of over 15,000 people. I expect we'll see this repeated in Friday's data. And finally, on Wednesday, QV announced that house prices fell 3.9% in the March quarter, the largest drop in 15 years. In Auckland and Hamilton, however, this was hardest felt, with prices down around 5.4% over the same period. Good news for those looking to enter the market, probably bad news for those already in it. Now let's talk about interest rates here in New Zealand, starting with term deposits. Just ANZ, ICBC and Westpac have changed theirs in response to a change in OCR. For a 1-year term deposit, Rabobank and Heartland offer the best rate of 6%. ANZ increased their rate 20 points from 5.5 to 5.7%, but remains less competitive. On the 2-year rate, ICBC and China Construction Bank offer the best rate of 5.45%. Westpac offers 5.4% here, owing to their 10-point increase this week. On the 3 to 5-year deposits, once again ICBC and China Construction Bank offer the best rate of 5.45%. Now let's look at the mortgage rates. ANZ has hiked their floating rate by 40 points, and their 1 and 2-year fixed terms by 20 and 14 points respectively. ICBC hiked their 1-year rate by 14 points, and their 3 and 4-year rates by 20 points, and their 5-year rate by 24 points. Coleman raised their floating rate by 1%. And late on Thursday, Westpac hiked their floating rate by 40 points, matching ANZ, their 1-year rate by 20 points, and their 2-year rate by 5 points. But contrary to others in the market, they dropped their 3 to 5-year rates by 50 to 60 points, which are now among the sharpest in the market. Heartland Bank still have the best rates on the floating, the 1, the 2, and 3-year terms by a decent amount. However, for the 4 and 5-year terms, Westpac have the best rates by over 40 points. Now let's check out the stock markets, starting with NZX. It was a short week, with Easter closing the market for a couple days. Since Tuesday, the NZX has had a pretty good week, up around 0.5%, with 88 stocks rising while 56 fell. The Those that did well include PaySource, which had a favourable quarterly market update announcing some big growth numbers, Pacific Edge, Scott Technology, Carbon Fund, and New Talisman Gold Mines. On the losing side, Green Cross, which runs well-known pharmacies including Unichem and Life Pharmacy, was down over 18%. New Zealand Automotive Investments, Rua Bioscience, Blisstech, and Allied Farmers also found themselves down for the week. Over on the Australian market, they had a huge week with the market up 1.45%. This saw 139 stocks gaining and 36 falling. On the gaining side is Nickel Mines, Corporate Travel Management, NextDC, Appen and Megaport, all up around 10% plus. On the losing side, there was casino operator Star Entertainment, Redbubble, Atlas Arteria, Cogan and Costa. And finally we have the S&P 500, which also had a great week, up 0.89%. Banks and insurers have rebounded from their poor performance last week, as have healthcare and utility stocks. On the losing side this week were the tech giants, semiconductors, payment processors, auto manufacturers, and resorts and casinos. So that rounds out another weekly update. If you enjoyed it and want to keep up to date on everything financial, make sure to subscribe to my channel down below. If there's anything you'd like me to add, please let me know also down below in the comments. Thanks for watching, and I look forward to catching you on the next one. Cheers.